January is almost over. Much to the surprise of many, 2023 has started out to be a pretty good one for stocks.
Yeah, Rick Reagan is here to explain why and if it will continue. So, Rick, you have to like the year so far.
So good, and it's all the major indices are doing pretty well. When we take a look at the Dow Jones Industrial Average, we have the Dow, so far it's the worst one of the year. It's up about 2.5%. But what's really interesting is we have a stealth rally going on from October 13th of last year, which happened to be the low. So the Dow, since October 13th, is actually up 16% in value. The S&P 500 has done better, up 6% year to date. Not quite as strong since last October, but up 13%. But take a look at NASDAQ, the tech stocks, so far this year. NASDAQ is up almost 12% for the year, and just about that since last October. So the stock markets, again, not only doing well to start the year here, but quietly have made some real improvements since last October.
So, Rick, what caused the big rally?
We had a few things. I mean, China reopening, we certainly weren't expecting that a month ago, the way they have reopened. Easier winter in Europe has caused their economy to do better. But the big thing is that there's signs of what we would call a soft landing here in the United States economy. And what that means is the market thinks the Federal Reserve, rather than raising rates all year like they did last year, are actually going to start to lower them. You're taking a look right now at a chart of what is expected, the market expects from the Federal Reserve. You can see they expect slight increases to June and then coming back down for the second half of the year interest rates, which means that mortgage rates would come down, automobile loan rates would come down. That could really help the economy. It's the Fed expectation that's the #1 thing that's moving the market right now. And we'll see. The Fed has a meeting this week. They'll announce on Wednesday. So let's see if they decide to rain on our parade.
Despite the better news for markets, you give it a better than 50% chance that we go into a recession in the second part of the year. So how can stocks actually go up in a recession?
You know, I think you said it right, Ryan. I give it a better than 50% chance, but I don't give it an 80 or 90% chance. We don't necessarily have to go into recession. But if we do, I think it's going to be a fairly mild one. And I think it's already priced into stocks. If we take a look at a median recession, so just your run-of-the-mill recession, which is what I think we would have, stocks tend to drop 25%. Last year, at our worst, in October, stocks were down 27%. So, Ryan, I think a recession is already priced into this market. And just like the market moved down before the economy moves down, I think we can see it move up before the economy actually looks better.
So we'll stay the course and we'll stay invested.
Exactly right. I think we'll finish the year higher, if nothing else, and at least we had a good start.
Okay, Rick Reagan always making us smarter on a Monday. Thanks, sir.
Take care.